Good day, ladies and gentlemen. Welcome to the show on this Monday, November 28th, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, why silver? Why now? A very important topic and very important subject matter. This is such a hard time for investors, such a hard time for small investors. People of the middle class were virtually being destroyed by the Federal Reserve, who basically creates what we call nothing, which is Federal Reserve notes. And you know, all the central banks follow in line doing the same thing. It doesn't matter if you're in Canada, it doesn't matter if you're in the United Kingdom, doesn't matter if you're in the Eurozone, doesn't matter what fiat currency. If you're in the Eurozone, you're using the euro. If you're in the United Kingdom, you're using the Great British Pound. You're in Canada, using the Canadian dollar. America, using the American dollar. It doesn't matter. We're all suffering the same impact by our central banks, who basically create this money from thin air through debt creation. And there's nothing really attached to it. It's absolutely worthless. It's something the main investors, like in places like Wall Street, they call it fugazi. It's not real. It's not real money. What has always been real money through history is gold and silver, because they have a value attached to them, because there's something required in order to obtain them. It works kind of like this, you know. Say you were in a culture. Say we lived on some other world, a planet someplace, and there's trees, but the trees never had leaves on the trees. And once every 40 years, the trees would sprout a leaf. And the leaf would grow, and then it'd fall off the tree on the ground. Everybody would go and collect it, and they use those for money, because the trees had very few leaves, and they'd just go out and they'd use those on the planet. But say a genetic engineer come along, for some reason or another, he was able to make it so all the leaves would grow on the trees, and the trees would all sprout billions of leaves. Suddenly their money would become valueless, because there would be so much of it. This is the way with debt created or debt-based money. The control over that money and the creation of it lies with the central banks. They can create as much of it as they want, anytime they want, by creating more debt. And so we're basing our system and our value of everything that we have in our system based on something that has an unstable footing. But what does have a stable footing? Your stocks and your bonds, they're built on that unstable footing. Your money that you in the bank is not really yours, and it's also based on that unstable footing. It's connected to the dollar. Your equities still connected to the dollar and connected to that unstable footing. Everything in our life, our society, is connected to that unstable footing. It's not real money. Even the cryptocurrencies that so many people love and have hopes in are connected to the financial system, and they can affect the value of these cryptocurrencies negatively or positively, depending on what they want to do with these central banks, depending on policies they enact, or whether or not they allow certain things to happen within the crypto industry. And they can also manipulate the price of the cryptocurrencies up and down. So where are you going to turn in a financial system like this? What about real precious metals in your hand? What about that? Well, you guys, have you actually thought about that? What does it mean to actually hold a piece of precious metals in your hand? Specifically silver. More so than gold, but gold too. Both of them, silver and gold, and also platinum and palladium, and but primarily gold and silver, and primarily silver. What does it mean to hold an ounce of silver in your hand over all of these other financial assets you have out there? It means you're holding something in your hand that has no counterparty risk associated with it. And we're going to talk about that in just a minute, counterparty risk. It also means that you're holding work in your hands. You're holding energy in your hands. So with an ounce of silver, how much work are you holding in your hands? Well, what's involved to obtain that ounce of silver is they used to be able to go and mine a ton or 2,200 pounds of ore, which is a metric ton, out of the ground and crush it. And I think they were getting something like 19 ounces. Now it's down like 9 ounces or 8. It's cut in half. Anyway, I can tell you that, guys, this much. That the ore, because they've worked through all the best ore grades. And what that means, ore grades, is what they dig out of the ground. They call it ore in a mine. And it's earth. It's dirt. It's dirt that's compressed oftentimes into rocks. So it's rocks. That's not silver. It's rocks. But inside those rocks, it's got little tiny pieces of silver in there. Well, how do you get it out? Because you want the silver, you don't want the rock. Well, only one way to do it. They've had to put it inside something called a rock crusher. And a rock crusher is basically a machine that smashes the rocks until it turns them into smaller rocks. It's that simple. Then what they do is they take those smaller rocks again, they run them through the rock crusher again, they turn them into even smaller rocks, what you'd call gravel. So now it's not rocks anymore, it's small little stones called gravel. And then they grind them again down into even smaller rocks, pea size, what they call pea size. It's little tiny rocks the size of peas. And they rock crusher them again. And each time they run them up a conveyor belt. And they rock crush them again. And they keep doing that until they get it down to powder size. So basically they've taken the rock, ore, what they call ore, which is rocks that have a little bit of metal inside them, and they've ground them into a powder. That takes a lot of energy and work. Because if you want to understand how much work that takes, take the amount of rock that would contain 1 ounce of silver, which would be several hundred pounds of rock. Put it in a wheelbarrow and start beating it with a hammer until you get it down to powder. And it's going to take you several days of pounding. Each day you're going to want to have a big meal because you're going to burn so much energy. If you're a real strong man, you could pound all that into rock, into powder. Then it says you're not done. You got to take that powder now, and you've got to put it in like vats of water and stir it in with chemicals and stuff that'll take those little tiny flecks of silver and extract them from the powder and remove all the parts that are not the silver and take just the parts that are the silver, and then you got to heat it up and extract the silver from that through extraction process of also heating. And heating takes, whenever you create heat, you're using up energy as well. So finally you get it down into this form of what they call a dory bar, which is unpurified silver. And then you got to heat it again to purify it into 999 pure. And you got to form it into the shape of a coin that you want to buy. Each process is a long, lengthy process. It takes a lot, but it is energy involved. So you get it to that final stage. How much did that cost? Well, right now there's a very, very fine line between cost of production, how much it costs, how much energy it costs to produce that ounce of silver, and the final product. Now you name me one other thing out there that you can buy in this Fugazi system where they create money from debt, like in your financial asset products, that hasn't been leveraged up much higher than its initial value of what it has involved. So if you take your equities, for instance, earnings and so on, and the company's net value and everything, if you take all that into consideration, they're dealing with price ratios right now. They're just like, they've ballooned them up through leverage. The system is so over leveraged that the actual value involved in most of the things you buy is like, say you've got something that's worth $100 in this financial system out here. You've got something that says it's worth $100, say a stock or an equity or a bond or whatever. The actual value behind that might be only 25 cents. Say Bitcoin, for instance. Bitcoin is something that it does have a value behind it in production cost. But it's much lower than what the actual cost. And when Bitcoin was 68,000, it was many multiples higher. And that's something that's good. And a lot of things don't have anything behind them. I mean, they're like the fiat currency itself. They're just wisps of. But see, now you've got this value behind silver. This value is the energy it took to get it. And what I'm trying to tell you guys is that it takes almost as much energy value as the coin's worth. So when you invest in the silver, you're not really looking to try to make all these gains and profits right away, like these other financial products out there that are completely valueless, might double overnight, especially in the crypto industry. But what's the bottom line if the market decides to drop out? You can lose everything. So it's for gamblers. Basically, that's the way I look at it. It's for gamblers. Me, myself, I'm not a gambler. I don't like gambling. I like sure things. And what I'm trying to tell you is the net value behind silver is solid in the fact that it requires all that energy to make it, and it's the reserve that is. Remember I talked about ore grades? Remember I said at the start how they used to get like maybe 19 ounces or something out of a ton? Now it's down to half that. Well, in the next few years, it's going to drop to half that again. So it means each time it drops like that, it's doing the same thing cryptocurrency does. Cryptocurrency simulates this, and it simulates the mining industry. That's with Bitcoin. Every 4 years, they do what's called a halving. Well, we're undergoing a natural halving with the precious metals, because they're mining out all the best precious metals out of the ground, and every so many years there's only half as much there when they mine the ore. The ore grades are falling, meaning that there's less precious metal in the ore, so they have to mine more and more ore to get less and less precious metal. And what does that mean? It means that your precious metals is going to slowly go up in price year after year as the cost of energy goes up. It's tied into energy. And so one of the best things about silver is you're tying into the energy industry, which you're running out of fossil fuels. And they're getting harder and harder to get fossil fuels, as long as silver getting harder and harder to get. So it makes it a fantastic investment that's only in the future. Looking out forward 5 years, 10 years from now. Sure, in the short term, it might go down a little bit. But look, see, you got to think long term if you want to retain your wealth in this system that is in decay. So, it takes a couple 100 pounds of ore, and they got to crush it to powder, and they got to do all that work to get that ounce of silver. And you can hold that in your hand. Now we're going to talk about what I said about earlier. It's called counterparty risk. And this is extremely important. Your money in the bank, when you go and use your debit card, you slide it through the thing, and you're expecting it to pay for something. And most times it does. But what I want to run over with you real quickly is what's called second party and third party transactions. A two-party transaction means, like in the old days, you used to take your dollar bill out of your wallet, lay it on the counter. It didn't matter if the internet was on, because it's a two-party transaction. The person across the counter and you are making a transaction to purchase something, and you're giving them the money, and they're giving you, say you're buying bananas. You're buying the bananas. And they slide the bananas across the counter to you. You slide the dollar bill across the counter to them. Two parties. Nowadays, when you use your debit card, that's a three-party transaction. What happens is you want to buy the bananas. So you pull out your debit card and you run it into a little tiny terminal machine. That terminal machine sends a signal to the bank. And the signal comes back at the speed of light. Bing bang. The bank has to say, hey, we verify and we decide whether he can make this transaction or not. And that's called approved. Then you see the register lady, she says approved. That means that the bank sent that approval signature. They said approved. They decided whether you're going to have your bananas or not. Not you. Get that through your head, and that's very important. That is counterparty. The counterparty is the bank. And that's the counterparty risk is if they did come back and say, hey, we don't approve him. We're not going to send an approve signal back to the register. The register lady then says, well, you're not going to have your bananas. And you say, why? Well, the bank didn't approve your transaction. And you didn't even know that. Most people out there, most probably you right now that are listening to my show, didn't know that that's how it works. Because you always get an approved. And the lady says, here's your bananas. You've never had a thing happen where you've been disapproved. Well, some of you have. So you know what I'm saying is true. Everything out there, your crypto, your bank account, your stock portfolio, your bonds portfolio, everything that you have that's connected to how you get money and how you survive in this system has counterparty risk associated with it, because there's a third guy out there that can say no. Even if you've got your precious metals stored in a vault someplace, you go in there and your wallet's in there, and the vaulting company says, sorry, Mr. Jones, we're not going to give you your precious metals today. He's a counterparty because you gave it to them in trust. And now they've decided to give you the boot. That's counterparty. There's only one way to avoid counterparty risk. You got to hold it yourself. Then there's no counterparty risk. Now, how many things of value can you actually hold yourself? Not much. Your stock portfolio, you're not holding it yourself. It's going through a big company. I can't remember the name of the company, but it's going through a company, and they could say, no, you can't have it, or whatever. And this happened in 2008 to a lot of people. They got the shaft, so to speak. Your bonds. You know, that's one of your safest out there, but still, it's connected to the value of the dollar. And if the dollar hyperinflates, well, the bonds hyperinflate too, and you lost money. Or bonds can change. You can lose with bonds. Believe me, you can lose big with bonds. You can lose a lot of money. I mean, just because bond prices have been stable for the last 40 years doesn't mean we couldn't have a bond market collapse. And we're right on the verge of such, because look, yields on the 10-year have moved from below, I think they're below 1% even, and now they're like almost 4%, or they crested 4%, higher than 4%. And you've lost quite a bit if you bought in at the top of the market, you know. You lose. Everywhere in the system, you're looking at counterparty risk. But if you hold that silver coin in your hand, that simply is something that doesn't have any counterparty risk to it. It's stored energy. It's money in its most pure form with no counterparty risk. And it's beautiful. And this is why I wanted to talk to you guys about silver this morning on here. I want you to think about it. It's rare. It's getting more rare on the Earth's surface. Yeah, there's a big rock floating through space out there that's got tons of it on it. I can't remember what the name of it is, but it's built out of gold and silver and everything else. It's a big rock but they can't land on the thing. It's traveling like 200,000 miles an hour. And how are they going to land on that and extract it? Costs more than it's worth to just try to get it back here. So, I mean, that's useless. Just like a lot of the minerals on places like the moon and Mars and everything else are too hard to get home. Mars might have a big lump of gold on it, but what good's it going to do you if it costs more to get it home than the gold's worth? You know? So all that talk about, that's all just talk. what we're dealing with here is a reality that on the crust of our planet, gold and silver is getting rarer and rarer and harder to get. And yeah, they might have talk out there about gold in the Grand Canyon or whatever. Yeah, it might be there. But you tell me how you're going to get around these laws that are not going to let you mine, and you're going to go in and set up a mining operation inside the Grand Canyon? I don't think so. Good luck with that one. Anyway, listen, guys. Energy costs are just going to continue to go up because energy is limited here now. We've mined most of it. And as gold and silver, they've mined it out, and it's getting less and less in the ground. It takes more and more energy to get it, and it's simply a loop here that's going to yield higher and higher costs in the future for obtaining these metals. And if you own it in its physical form, this is better than the bank account you have. Much better, much preferable. And that's where I'm going with this talk. Anyway, listen, guys, have a great afternoon, and we'll catch you guys again on the Delta Report. Bye-bye.